historic day.
5 years ago today, the Dow and the S&P hit all-time closing highs. A financial crisis and European debt debacle later, stocks are not that far away from those historic levels.
Ends with disappointment.
Apple's been the must-own stock for many of these money managers, and now that it's starting to go the other way, it may confuse the October 31st year-end.
And Alcoa kicking off earnings may put another dent in confidence.
I know at times I've cursed at the prospect of a stumbling Alcoa kicking off earnings season with a miserable first quarter. The number of times this company seems to have missed estimates is boundless. The tone it creates makes people cringe.
Your full earnings playbook plus Marc Faber on Fast Money right now.
Live from the NASDAQ market site in New York City's Times Square, I'm Melissa Lee. An unhappy anniversary for the bulls today, but earnings from Yum and Alcoa coming in better than expected. Our concerns about earnings and global growth here overblown. Should we just be happy, BK, because the first two earnings out of the gate seem to be good?
Well, I certainly think the one thing that's not priced into this market is better earnings and a better economic environment. That's for sure. I mean, everybody that you talk to is doom and gloom around, and the economic numbers have not been that great. So certainly some of it's justified. But today was a very interesting day because the whole rally from the 2009 lows up till now has been driven by this push and pull between policy and economics and or fundamentals. And today we had both a policy response in China and economic fundamentals with the IMF cutting the growth forecast. And today the market, for the first time in a long time, chose economic fundamentals, which to me is a warning sign. I mean, I know we're down quite a bit from the peaks here, so it's certainly not a place that you want to go all in short, but it's a warning sign that happened today and a very interesting day.
You know, but you were actually a big, and I'm not calling you out on this because you were right. You were bullish from the 1400 level all the way up to 1474. So you're turning back now saying lock in some profits?
Well, I would say absolutely lock in some profits, and I think you need to watch for the risk that the market has changed its stripes a little bit. Like I said, I'm not all in, turning bears.
How about this really
on
quick,
by
just to
anything.
get you trade right out of the blocks? What about a CLF? What about a name like that, where so much of the conversation has been about iron ore? Now, if you look at iron ore prices seem to have bottomed, but CLF hasn't reacted to that yet. It seems like you still have time.
I'd much rather be in the natural gas space, and we'll probably talk about that later. I think there's been a structural there's been a structural shift in the coal area where China's just not going to need as much as they used to, so I just think there's better investment.
Did you catch me rolling my eyes at your joke, by the way?
I forget a rim shot.
I rolled. By the way, let's talk about Alcoa just a touch, because they were saying that overcapacity, not slack demand, is behind the lower aluminum prices. They did say a slowdown in China, but in large part, Alcoa came in just fine. A beat on the top and the bottom line. They're standing by their estimates, and they're standing by their growth for aluminum demand, saying that it will double between 2010 and 2020. Talk about a long-term forecast there.
Well, I mean, Alcoa doesn't really have a lot of credibility on the long-term forecasting side. I don't think earnings season really starts until Jamie Dimon starts it on Friday. So we're going to get through what Alcoa does, and it's going to go up, down, and all around. But I think the bigger issue here is the same issue we had in October of 2007, which is you have the confluence of growth slowing and earnings slowing at the same time, and you can't just sit there and be complacent and say fundamentals don't matter. They come home to roost when that company has to report the number, and I think it's going to be very much a stock picking environment from here on in.
But in terms of the guidance that they're giving at this point, the China slowdown, yeah, we knew about that. What Yum is also saying about China confirms this notion that there is some sort of a slowdown. The fact that U.S. same-store sales growth in the U.S. is now the same as China really speaks to the slowdown in China as opposed to gangbusters growth here in the U.S. I mean, it is China that is slowing. We're getting 2 data points tonight from it. So what can we glean?
Well, I got distracted when he said Jamie Dimon. But I know, well, that'll be an interesting earnings report. But, Yum, as I said yesterday, I sold it too early. I think that the story is still generally intact. It's not surprising that it's slowing a little, but I think the stock also reflects a pretty intact story at 20 times. So even with okay earnings, I'm not about to jump in here. I don't feel like there's that much upside, and there is downside.
Look at the size of the relief, though. We take a look at shares of Alcoa and Yum Brands in the after-hours session on these earnings beats of BK, and this sort of tells you about what the markets were setting up for. They were setting up for the worst. I mean, they really didn't have any expectation when it came to Alcoa or Yum Brands because of the China slowdown.
Yeah, the bar is very low going into this earnings season, so you definitely have that risk that you have people short, and you could get kind of a rip-your-face-off rally. I don't know if it happens, but certainly I know that markets tend to go in the directions that hurts the most people, and you never get hit by that bust that you see. It's always the one you